Well, good morning and welcome to today's webinar, looking at faster payments fraud and giving a strategic outlook for financial institutions. And we're very, very pleased to have back on the screen Taavi Tamkivi, CEO of Salve, who is going to make our keynote presentation this morning. Before we start, a few words of thanks first to our sponsors. We are very fortunate at the FS Club to have a range of sponsors who support our work and enable us to run this series of events. We really are grateful for their support and their continuing interest in our work. You'll know me, I expect I'm Mike Wardle. I'm the CEO here at ZN. My job today is to chair the session, and mainly that means being very quick and getting out of the way so we can hear from Taavi. But a few housekeeping points along the way. First of all, the session is being recorded, and the recording will be available in a couple of days' time, either if you want to go back and check your recollection as to what was said, or if you want to share that with friends and colleagues. The format's quite simple. We have about a 20-minute presentation, and then there'll be about 20 minutes for Q&A afterwards. If you haven't used the GoToWebinar system before, then the way to ask a question is to find the question tab on the dashboard on your screen. You type in the question, and that will come to us after the event. Do put your question in at any point during the presentation as it occurs to you, and we'll store those up for the Q&A session. The final thing to say is if you do ask a question, we'll pass on your contact details to Taavi, so if there's a need for any follow-up discussion, that can be made easier. But it really is a great pleasure to welcome once again Taavi Tamkivi, the CEO of Salve, to talk to us. And Taavi, the floor is very much yours.
Thank you. Thank you. Just to double check, can you hear me well and can you see me also?
We can see you. I can't see your slides at the moment.
Yeah, I'm just giving intro first without slides, and then I will switch them on. But you can hear me, right?
Yes.
Okay, thank you. Yeah, because I can see only my own face here. It's yeah, thank you all, and it's great to be back in the show and to share some of the learnings I've gathered over the last year or so around the financial crime and around the specific type of the financial crime, which is impacting not only UK, not only Europe, it impacts countries which are quite far away from us in the similar manner. So that has been really exciting, but also dramatic learning for me, which I'm happy to share with you as well, but focusing still on the UK mainly. And I must apologize, my voice is a bit clunky because I just came back from the wonderful trip into Bhutan Kingdom, which is somewhere between China and Thailand, China and India, sorry, and near Himalayas, or on the top of Himalayas actually. And actually, despite the fact that I took time to rest over there, I saw also local banks and I saw financial system, and unfortunately the financial crime, different versions of the financial crime is happening also in this kind of really far away places under the kingdom regulation. So these learnings that I'm sharing with you are pretty much repeatable, reusable in various places of the world. So I'll share some slides and some thoughts with you, and then later on we can have a discussion around them as well. So if you give me a second, I'll try to share my screen. Is it visible?
Yes, that's great. Thank you.
Okay, thanks. So what I'm going to talk about today is the authorized push payment fraud, or like instant payment fraud, or faster payment fraud, however it's called, and what are the challenges it's causing for the financial industry around us, and how regulators and institutions and technology providers are trying to tackle that, or are trying to limit it. But before going into the APP fraud itself, just to zoom out a bit, to explain where we are in this financial crime space in the right in the correct moment of time. And I feel that I'm repeating myself like every year, but it seems to be like we are in the middle of the perfect storm, which is like maybe silly acronym, but when thinking about different drivers or different factors which are impacting the financial institutions, their customers, like individuals and companies, and also which are enabling criminals to be more and more effective in their work or in their crime. That's getting worse and worse kind of over the time, which I wouldn't expect in our modern society. So criminal organizations are getting more sophisticated. They are doing more cooperation, like the work being spread between different types of the service providers within the crime space. People who are stealing documents, people who are getting access to the victims' accounts, people who are like doing the real like delivery of the physical goods, opening up new accounts, acting as a money mule. So that's like one huge like network or list of networks of criminal gangs which are working together. There is AML regulations, like anti-money laundering regulations, are getting harder and harder, which are putting more pressure on the industry and financial institutions. At the same time, these institutions are more forced to do what's written in the laws, and maybe they have less freedom and less resource to focus on the crime that they do find. Speed of moving assets is increasing dramatically. These instant payments or faster payments, these are super good for the consumers, but the criminals are super successfully using those technologies as well to steal the money. Rise of cryptocurrencies. We have seen all the good things which are coming out from the cryptocurrencies, but we keep seeing also more and more bad things which are coming out from the crypto space. Again, naturally, quite related to the different wars which are happening and the funding of the wars happening over the crypto space. It used to be more like terrorist financing in the old days, but I think terrorists are also getting financed through different channels. But now the wars are also getting financed, and there are a lot of studies and reading about how the Wagner war group got their money through the crypto assets and so on. Then the Ukraine war itself, Russian war in Ukraine, it's introducing new sanction packages, which is great, like that we can apply those, but actually technically it's super complex to run those in the sufficient level. So again, and new payment methods or new ways of moving money, thinking about the e-wallets or like PSD2 direct access to the bank's infrastructure. So these kind of things are making ecosystem more and more complex, and criminals are getting lots of benefits out from this complexity. And unfortunately, financial institutions and regulators are not getting that much benefit out from this yet, and that's why we need to work together to get that. Jumping into the concrete example, but this example is like really important because it touches the end users, consumers, and businesses a lot. Unlike the sanctions or unlike the money laundering, which is intellectually important and emotionally really crucial, but it's not touching end users too much, then the authorized push payment fraud is actually impacting directly the victims are around us. Maybe ourselves, we have been targets. And basically, the idea behind the APP fraud or authorized push payment fraud is that people, or like people in private persons or people in the companies, are getting scammed by the criminals, and scam messages are encouraging them to make voluntarily payments to other accounts which are held by the criminals already. Sometimes people are voluntarily giving access to their accounts to criminals, and then when criminals do have access, then actually it's super easy for them to steal the money from the accounts and send it in near to real time into different institutions, and it's super hard to get this money back. And I'll dive into this more and more, but that's the meaning of the APP fraud or authorized push payment fraud. like UK finance actually, and many other institutions are doing pretty good tracking of this type of the fraud, and the numbers unfortunately are growing. Just from last year, like £500 million was stolen from the around 200,000 consumers, plus the company's losses as well. And the worst is that like less than 5% of these losses were recovered for the victims, and the victims literally lost their money. Sometimes banks voluntarily, who are behind who are serving these customers, compensated these losses from their own pocket, but that's like direct loss for the banks then, not for the consumers. And it's very little percent of the people or the banks are getting actually the money back from the criminals. And that's, again, as I said, like I'll drill further into details on this topic and what are the hopefully positive trends in the market that we see. Just if you read the news, or maybe like if you're following social media, or you have your own experience with some people, there are different types of the scam messages that people are getting, and surprisingly high percentage of people are actually reacting to these scam messages. And again, during the modern times of the AI technologies, these are making it even easier to like provide these high quality scam messages. In older days, it was like for translating from language from some more exotic places into English, Google Translate didn't do good work. Now the ChatGPT puts the really hacky sentences into proper British English without a question, or it generates nice pictures if needed, and so on. So it makes it easier to increase the quality of the scam messages. And again, UK Finance and other institutions have been able to classify those scam messages which are teasing people or encouraging people to make payments to criminals. So we can talk about impersonalization, so that you're getting a message from the bank, or like not from the real bank, but actually from your accountant from the bank, or like personal banker. You might get a message from police forces which are encouraging you to access your bank account details, to hand over the bank account login details to them. If you're working in the company, then you might get a message from your CEO to make a payment to your business partner. So basically, the sender is actually trying to be someone else, and you tend to believe, and people tend to believe that this sender is someone else, or like that maybe. And the problem is that like a couple of percent of the targets, like if 100 people are getting the message, maybe like 3, 4, 5 people out of this 100 will react to that. So it's pure mathematics or conversion rate. If you compare it with a classical sales process that you might do in your companies, then what's the likelihood of sending out 100 sales pitches or sales calls, and how many people will react? So criminals are thinking and measuring the performance in a similar manner. They're also like measuring the conversion from messaging to actually some outcome of it. And then also like other types of the scam messages, like romance scam. Someone is trying to become your loved one or wife or husband in the future, and they're encouraging you to send some money over to them to travel to investment opportunities. There are lots of great, or like so-called great investment opportunities with some internal insider information that you might get, which encourages to make a bank transfer to the other account, and you will never get back the shares actually. Like purchasing some goods for really good price, like iPhone or furniture or whatever, just fake sales offers. Just regular invoicing fraud as well, like paying your utility or whatever, where the target account has been changed, and they are like, I think this invoice looks like a real invoice that you have been used to paying before, but actually like the target account is different. And luckily it's possible to measure, and through the surveys and studies which are done by the banks and other institutions, there are some volume estimations behind these types. And as I said, like some of the really good institutions are already compensating the losses to their customers, but these institutions themselves are actually suffering, and it goes straight to their bottom line as a loss, which isn't good either. And as I said, like in the news, also in the UK, in the Prime Minister level, actually, Prime Minister announced the anti-fraud strategy campaign back in the spring or in beginning of summer, how to tackle this kind of specific type of fraud. And naturally, the question raises like, if it's a so big problem and it's getting so much attention from different people and authorities, like why it's not stopped there, why it's so difficult. Just I would like to introduce, get your brains and focus on this schema, how it works, so it gives you a bit better understanding why it's quite hard to stop. So first of all, it starts with actual fraud, which is like where the targeted person has account in the real retail bank. It tends to be like one of the maybe biggest banks, tier 1 banks, where the victim has been holding their money for a long time. They trust the bank, and they're getting attacked by this scam message. And then some of them will send voluntarily their money over to the next institution, to the money service business, MSB. And then quite often, this money service business itself doesn't process their payments or doesn't hold their money, but there is like banking as a service provider between them two. So step 2 is that via banking as a service provider, the money is transferred into the money service business. And there are like lots of names that you use and see quite often actually in this world as a so-called cool fintechs, and like large fintechs and small fintechs and the money service businesses. And the thing is that the accounts on this MSP side, these are already held by the criminals or the money mules, or like people, maybe students who have been hired to create an account over there. They get some $50 or so, they get some money for opening account, for accepting or getting the payment from someone who's unknown. And quite often these money mules need to transfer the money to the next layer, which is the 4th step, which is like virtual asset service providers, or maybe cash out through the ATMs or some other channels. So that's where the stolen money, according to AML terminology, it's integrated. The layering is a middle step for the and actually placement is the first step or second step, where the stolen credentials are like actually triggered. And now what happens is like on the bottom row, sometime later, maybe a week, maybe 2 weeks later, the actual victim of the fraud finds out that it wasn't a legitimate case that they got introduced. The scam was actually, they understand that the scam was a scam, and they didn't get the benefit that they were hoping to receive. So obviously they will contact their bank. They will say that they didn't want to make this payment, although they did voluntarily. They are asking if they can get their money back. Then bank has to submit the recall command to the partner, the recipient, through the banking as a service provider to the money service business. So the bank does what they need to do. But of course, as this message comes in like a few weeks later, then most likely the money is already gone into the wild world, and there is nothing to send back to the victim, and either bank suffers the loss, the victim's bank, or the victim itself suffers the loss. Anyway, the criminals have made their money already, and there are some cases where the recovery is still possible for whatever reasons if criminals are making mistakes, but the success rate is like very, very low. That's ultimately how the APP fraud works and why it's so difficult. It's like the value of these transactions is fairly small. It's not about hundreds of thousands, it's rather like few thousands. In some cases, it's in 10,000s, but normally it's like few thousands of pounds or euros are being stolen. But actual number of these transactions is quite high, which means that like banks, anti-fraud teams for them it's fairly expensive to process these cases and to go into details and to run complex investigations and to do a lot of manual work to set up the rules. And then this kind of like low value, high volume type of fraud, it's also like e-commerce companies are suffering under that card, who are offering card payments and stuff. So that's like the one side is like it's hard, like expensive to process these cases. The second reason is that these are faster, these are instant payments. So at the moment when the transaction is submitted, a few seconds later it's already delivered, and maybe a minute or a few minutes later, this transaction is again delivered into next institution, which means ultimately that human beings need to compete with the machines in terms of the speed of stopping it, which is really hard to beat. Another reason is that most of the fraud systems by the banks or for the banks and fintechs, these are watching existing customers and their own outgoing payments. Like if customer is sending money out from the account, then monitoring those. But very little focus is put on the incoming payments. So if you talk about these money mules who are receiving money from the victims, then their account holding institutions most likely do not have any fraud controls over those incoming payments. And that's like pretty safe way for criminals to handle this kind of money mule accounts if they know that these incoming payments are not monitored. Outgoing payments are monitored, hopefully, but at least like half of the event or half of the information is wasted. And lastly, institutions are not cooperating. There are banks, there are money service businesses, there are fintechs, there are banking as a service providers, and these groups of organizations naturally are not very friendly with each other, because banks tend to think that fintechs want to take away their customers, and banking as a service providers are making the system even more complex. On business level, it's like understandable, but actually in the crime fighting space, there is a need for this high level cooperation between these different types of institutions. And then don't forget about crypto companies also, like who are not maybe the most popular for the large banks, but actually these crypto companies are also part of these crime networks that they're being used for criminal networks. So there is a need for the higher cooperation on the strategical level, but also on the tactical level, which is missing right now. Luckily, there is a response from regulatory and industry happening. Financial Action Task Force, the global regulator, has called out some rules and some changes in the crime fighting world to stop the APP fraud. In the UK, the Payment Service Regulation proposed many responses, which includes that banks and fintechs will need to pay back the money to the victims. Like today it's voluntarily, but there will be it will become mandatory. The sender bank and recipient institution, the losses will be covered like 50-50, which ultimately creates economic incentive to start fighting it more seriously. There is like bank account and owner name verification, which is in place already. Like it's about stimulating banks and building societies to prevent APP fraud via peer pressure and transparency. There is a great web page where the information is gathered about APP fraud and which are the concrete institutions who are like how successful different institutions are in the crime fighting, and you can check it out later. But it's like how much what's the value of the APP fraud sent out from the banks, victim banks, and also on the left hand side. And on the right hand side, you can see the APP fraud received into these money mule accounts. And there are many other great statistics, and obviously these institutions can learn from each other. Like how come the JP Morgan Chase be so successful in like not receiving almost any crime, but actually some institutions on top are like in super bad position that they can learn from each other. And like why I'm talking about this, or what's my role in that? Like my company, like we have been building another solution which helps actually the banks and fintechs to be more effective in this fight. So we built a product which is called the Solve Breach, which ultimately brings financial crime, fin-crime team together. It allows concrete like fraud teams to collaborate with each other on transactional level to resolve the joint or common cases. The cases are being created for the across the institutions, which is like a new approach. And there are multiple use cases which we have built where the banks can work with law enforcement or like resolve the sanction screening RFIs between themselves. But in this context, the recovery of the funds or like the recovery of the funds, which is outcome from the APP fraud, is something that we are running now in UK as well and the rest of the Europe. And like back to this previous schema which I introduced, the fraud happens in the same way as it does. But what's now different is that actually the victim bank account, the victim bank, retail bank, sometimes is able to raise internal suspicion because of their outgoing payment monitoring or outgoing payment fraud monitoring, which is happening. And through the breach product or platform, they can immediately in real time trigger notification to start the collaborative investigation between the teams of these three entities: the sender bank or victim bank, banking as a service provider, and money service business. So basically, if in old days the speed of this reaction used to be in the weeks, now it's measured in the minutes. And through that, the success rate of recovery of stolen proceeds is like much higher. It's around 80% that we have seen. And that ultimately is like the speed is something, speed and cooperation is something that helps to increase the success rate. So, and like as a summary, like it's connecting tier 1 banks, money service businesses, banking as a service providers into the joint. They can connect with a platform or network, and whenever the fraud message happens, they can reduce the processing speed of these fraudulent events from current weeks to the minutes, and this delivers them like at least 10% increase in the recovery rate. And ultimately, if it's done properly, then economic incentive for the criminals will drop dramatically because the profitability of their fraud schemas will drop. And that's the thing, like it's not about stopping all the fraud in the world. It's about making it less and less profitable for the criminals, making it more expensive for them to defraud us. And then if that happens, then actually their interest it's not stopped, but it shifts into other regions, into other types of fraud, ultimately to lower levels as well. So that's it. What I wanted to share with you. I'm really happy to bring more and more interested parties into this network that we're implementing, running right now. I'm happy to share my experience around this APP fraud and other types of the financial crime going further, because like we do focus on also on the money laundering, also on the sanctions, other related things as well. But today's talk was about APP fraud and its consequences and countermeasures. So we'll stop sharing and we can get back to the Q&A. Thank you.
Well, thank you so much, Taavi, for that run across the field and for sharing some thoughts about how bridging technologies such as yours might help. We've got a question from Shane Dunian, who's asking for your view about what are the limitations of fraud countermeasures like risk scoring, and how are the issues with those kind of countermeasures best resolved, in your view?
Yes, today's countermeasures, like as I said, one thing is that I mentioned also in the talk that one thing is that most of them are focusing on outgoing transactions and existing customers, but very few of them are focusing on incoming payments. And basically, it's like this information for one institution, it even exists like in their database or like a payment processing database. This information is available, but quite often it's not used, and so it's like sitting in half blindness. The other part is that actually, how I explain it is like there's a lot of talks and comparison with AI and newer technologies as well. The internal, like if the fraud detection system is implemented for one company, and maybe they do report back to the service provider which is using this information in conjunction with other of their customers as well. But ultimately, there is like lots of different data points which are relevant for these fraud cases spread between different organizations. And yeah, because of the privacy and because of the Bank Secrecy Act and the GDPR, no one can own the whole information across the organizations in one place, which is like goes against the law. But actually, if you zoom into the legal frameworks, then actually, like teams, organizations are allowed to exchange some bits of information and gather some bits of information across 3 or 4 different institutions together. And what I'm saying is that in today's fraud countermeasures mostly don't take into account this opportunity or not using this opportunity to use wider data coming from multiple institutions. And to achieve it, it's like it's not easy. I'm building it myself again because of the legal versus crime fighting discussions. But actually, the width of this data is not actually included. And the third problem is that these risk scores. I used to be the fraud fighting head of fraud fighting back in Skype. If some people might remember the company, and then back in Wise or TransferWise, I was responsible for fraud and data analyst, and I was always struggling to see what's actually behind this risk score, to understand what's it actually mean for me. Like it's the risk score 99 sounds great, but actually, should I stop and decline the payment automatically without dealing with the customer? What's the reason? And like and very often these kind of things provide high false positive, which means that they need to allocate more resources for revalidating or checking or allocating my human resource to double check speaking with the customer, like most likely making them unhappy, then making them happy again. So it's like, of course, they have definitely a role to play, these existing methods as well. And the point is that the fraud fighting systems need to be built up like it's like in the layers. Like you have some risk scoring, and you have some internal monitoring, and you have some blacklists, and you have some like different things, and one doesn't replace another. Like, and that's the thing. Like it would be wrong to assume that risk scoring will resolve everything, or data sharing will resolve everything, or like the AI will resolve everything. But they all need to be combined together in the smart way.
Thank you very much. And there's a kind of follow-on, I think, to what you've been talking about, and just wondering whether, sorry, Hugh Purse is asking whether you can give a sense of the size of the distribution of fraudulent payments. In other words, is it the fact there's small payments being made, but across thousands of accounts, but because they're small, no one really pays attention or puts much effort into it?
Yeah, it's like according to statistics, the average in UK, the average fraudulent APP payment, I think it's around 2.5 or 2.6 thousand pounds. So it's not tiny. Like again, back in Skype, I was chasing £10 payments made with a credit card. And if you have like millions and tens of millions, hundreds of millions of this kind of £10 payments, it was like super hard to find fraud from there. Here we're talking about like a couple of €1,000 payments, which is like still small comparing to the transactions that the AML teams are dealing with, is 50K, 100K, millions, and then zooming down to the couple of thousand payments, pound payments. The volume of this kind of payments is fairly normal size of transaction also for the good customers. So filtering becomes more harder. Like if you think about the £1 million payments, then actually you have significantly less of those, and and you have more time and more reason to zoom into those and check the reasons and stuff. But actually for this kind, so that's but of course it varies a lot. Like we have seen victims who are sending their retired people sending their lifetime savings, like 30,000, 50,000 as one payment, or like two consecutive, like two related payments over to criminals. So it also happens in tens of thousands. In this case, is banks usually like the victim banks to detect those cases. But if the victim actually forces them to make the payment, the bank doesn't have any rights to stop it. And that's very sad, actually. The people I've spoken with the fraud agents in the banks who have said that they're trying to convince the person that it's a fraud, please don't send it. And the person is so certain that I need to do that, I want to do that, you cannot stop me. And 2 weeks later, the same victim is back in the same bank and says the cries and becomes so emotional. And yeah, but legally banks cannot stop them either. So.
Yeah. Because David's interested in how your technology works and what it would take for the likes of a big bank like HSBC or Barclays to adopt your kind of technology. Is it easy for a bank of any size to be able to implement this kind of solution?
Yeah, that's a good challenge for me as a product developer. Like it's like how startup, we're running a startup, right? And like startup, one assumption is that the technology or products are built in a way that it's easy to start using them, and the integration doesn't take a long time. And when working with HSBC or other similar banks, when trying to integrate something into their core technology, it's not easy. It takes years and years and years, as you can imagine. Actually, for the startup, it's even harder to convince them that it's the right thing to do. So we consciously took the approach that where the originally for getting banks to start using it, there is no integration needed. So it's basically web interface where people get access with the email. They can log in. They can already, it's like a case management system or case management tool where they can type in or copy paste the information that they want to share with the institution on the other end. Like HSBC might want to send a notification to Revolut because they saw that there was something strange going on from their customer who sent money to Revolut. HSBC didn't have right to stop this payment, but they have right to inform their AML or fraud team colleagues in Revolut immediately. And for this kind of activity, properly encrypted messaging with a proper legal background, auditability, secure access, and all the stuff which is needed, then this is like sufficient to deliver this manual message to the other party. And like this is like joint case management system. And of course, like whenever either Revolut or HSBC wants to integrate it to make it more automated with their existing case management systems, with their existing payment flow, some banks have already done it that once they receive like these money mule accounts, basically, once the institution receives a notification from the victim's banks, then actually automatically this suspicious accounts are being frozen. And it gives time for the investigators to check them manually. So there is such level of trust that one bank is okay to suspend their customer account automatically based on the input which is coming from other bank, which refers to super high true positive rate of these cases. Because like if it would be like 1 out of 10 would be right alert, then they wouldn't take the risk to stop their good customers account. But it's rather like a 90% true positive rate that they're actually getting right messages, and they're happy to stop these suspicious accounts automatically. But that requires some integration that they're done.
Thank you very much. Clive Bullins asked, have you any advice for individuals to deal with fraudulent requests for money when they happen, and how best to report them to the banks and the authorities? Any advice for poor consumers out there?
Actually, just like a few weeks ago, we found some providers who, like some companies who are doing that. I need to like find the names, and I can drop them into the slide as well. But there are companies who are focusing on helping victims to submit these fraud claims, and like formalizing the proper emails in the proper format and referring to the right legal clauses and stuff like that. So yeah, I was actually quite surprised to find this kind of service providers. I might want to work with them also as a partners, but definitely I think they would be happy to help people who are victims.
Thank you. Shane Williams, come back to us. What do you think it would take for the big banks and the other stakeholders like fintechs, law enforcement, etc., to cooperate on combating APP fraud? You mentioned there's some regulatory steps being taken, but what would it really take to get this cooperation working well?
If I would know, it would have been done already. Like it's yeah, like just again, my personal story from 10 years ago when I was working at Wise and we were trying to open, like Wise as a fintech and the money service business, trying to open accounts for Wise in the large banks with Barclays and many others, Silicon Valley Bank back then as well. And I remember, like with Silicon Valley Bank, it took me 2 years to open an account. It was still unsuccessful. Like they audited us and reviewed us. So the level of mistrust or like tolerance to risk that's coming from the fintechs for the banks, it's super low. Or like the fintechs are no good. Of course, now it's getting better, and there are like these kind of software banks who are more innovative. But by design, the cooperation between fintechs and banks has been really, really hard. And that's where I see that this kind of mandatory reimbursement, which is split between fintechs and banks, although as a private companies usually don't want to see like more complex regulations. In this case, this regulation is forcing these two groups of institutions to work together. And if there is economic incentive, they have the common KPI or common target to reduce the loss, this kind of fraudulent payments, because otherwise they will both lose quite a lot of money. I think that's already a pretty good start. And I see already when I'm working with the banks, like I'm working with the tier 1 banks in UK, they're saying that yes, it's fine that we can now cooperate between ourselves, but please bring us also companies like Revolut and Wise or N26 or like, please bring them also on board. Then we're really happy. And the same with the fintechs as well. When working with fintechs, they say that yeah, we're happy to exchange information between ourselves, but actually please bring us these kind of large banks that we want to work. So interest is already here, and they're looking for some kind of middleman who could actually do that. And of course, like, we're not the only one. There is UK Finance and there are many other organizations who are doing that, but this middleman role is now getting more important. And when this teams start to work together, then it's easier again. The trust is being built. But that's like we started a few years ago back in Estonia, our home market, and we saw that first starting with the banks, then adding fintechs one by one, and actually these teams trust each other really well today already, but it took 2 years to get to that point.
Sure. Nearly out of time, but Chris David has come back with a follow-up. He was one who asked about what it would take to integrate into a large bank. So it sounds like he just wants to clarify that currently you're operating almost a case management system rather than a fully integrated payment system, but there is the option to integrate sort of data flows for those institutions who want it. Have I got that right?
Yes, exactly. Like early adopters usually start with a common joint case management system, but we have also many banks who have already integrated us into their core payment system as well. Yep. But it takes time for them to build internal business cases and book the resources for that.
Super. Well, I'm afraid time has beaten us, Taavi, but a really engaging subject, and thank you for the questions from the audience. Again, just to acknowledge our sponsors and thank them for their support. And just looking forward, on Wednesday, tomorrow, we have a session on UAE and investment trends alongside the energy transition. On Thursday, a question: has the City of London benefited from Brexit as the golden days continue to fade? Next Tuesday, why London is the best place in the world to resolve legal disputes and how to keep it that way. And we're moving very quickly into the autumn events, so do keep an eye on the website and see what's coming up. Finally, Taavi, thank you so much for your presence today. And even with not your entire voice available, we were delighted that you were able to present to us. Thank you to the audience for your interest, engagement, and questions. And we'll see you again very soon. Thank you very much.